Okay, so today I want to talk about what to run screaming from in an investment advisor. I was in the business many years, and so I know of what I speak from personal experience. I think it's only fair. I've talked about bad behavior of real estate brokers. On the one hand, I think, as I've said in other parts of this channel, most people do need an investment advisor. I'm not saying that all investment advisors are like this. I sold my practice in August of 2013. I still have some connections in the industry, and I know a handful of investment advisors who were actually really good. The problem in Canada is that there's a lot of really bad investment advisors, and I've seen some, horror stories that would curl your hair. And I generally divide those types of investment advisors into two camps: the zombie investment advisor, the vampire bad investment advisor. The criminal genius mastermind investment advisor who's going to steal all your money and run off with it is actually a pretty uncommon character. They do exist, certainly. I've never actually known any personally. Frequently, they're friend of a friend stories. They're far less common than the vampire and the zombie. So that's what we're going to talk about today. The vampire investment advisor is becoming more common and more ubiquitous in Canada, in my view, for the simple reason of how the industry works, how the industry compensates and recognizes advisors. They don't compensate them or recognize them based on how well that advisor did for his or her clients, how few complaints they have, how happy the clients are when they take surveys and so on. The firms recognize and compensate advisors based on revenue. The amount of revenue that the client, or the advisor, brings in is the only thing that the firm seems to care about, as long as the assets are managed within a certain loose compliance framework. That's all the firms care about. Advisors are going to react accordingly. They're going to care more about generating revenue on your assets than they care about how your assets actually perform on a risk-adjusted basis in the market. How do you spot a vampire investment advisor? A vampire investment advisor is someone who believes typically that learning more about the way capital markets function is going to be a waste of their time. They want to learn more about how to sell and how to gather assets and generate revenue on those assets. They're not going to be enrolled in things like the CFA program, for example, any kind of program that's going to teach them about how capital markets work, the intricacies of it. They're going to care more about how to sell. They are the sort of person who is interested primarily in a one-size-fits-all package for everyone. They bring clients in, they do a little sales pitch about what's happened in the past about this investment style or process. They crank that person into it, and then they drive on. Bring in your assets, buy you a whole pile of stuff, and then you won't hear from them again for maybe a year, maybe two. The worst case I ever heard was they hadn't heard from their advisor in 6 years. Markets are dynamic and markets change. If you have a vampire investment advisor, they're going to put you in a one-size-fits-all product and drive on. Another sign of a vampire is that they use a lot of their own firm's in-house product, buy products that their firm has already manufactured, in a sense, because they happen to make a lot of commission on it. It may not be the best product for you, but it's the best product for them, and so they're going to sell it. Sometimes, and this is actually harder to spot, but you should ask the advisor this question, is if the advisor sells products from the firm's own book. Have you buy investments and stocks that the firm is itself trying to sell? So if firm XYZ has too many shares of Bank of Montreal, to pick an example, and they want to unload it, if your advisor has you buy it, that's typically a bad sign. That suggests that they're not being as independent and objective in their investment approach with you as they could be. That's a minor one, but it's one that you want to keep an eye on. He's typically a commission salesperson rather than someone who's going to charge you a flat fee on a yearly basis because he can generate more revenue buying and selling your account on a yearly basis. If he's buying and selling more than 2% of your account on a yearly basis, for example, that's probably a bad sign. So I've met a lot of vampires in my career. There were guys that would come in at the beginning of every month and said, oh my God, my daughter's tuition's due this month. I'm going to have to make $20,000 of commissions this month. Get me a list of everybody who has this company. So the interest was not to sell this company because it was good for the client. He wanted to sell this company because it was going to make him a lot of commission, or enough commission to cover this expense in his life. And the firm was fine with that because, of course, the firm generates a portion of that commission. So for example, if he calls you up and says, I want to sell your Canadian National Railway and buy Canadian Pacific Railway, and he gives you some will-o'-the-wisp type reason or a non-reason, that's the sign of a vampire. The forces and the factors that drive Canadian National Railway probably also typically drive Canadian Pacific Railway, so there has to be a real reason to switch out of one and into the other than him making commissions. The worst example I ever saw as an investment advisor is when I left the bank-owned world and went into a boutique shop. When you leave one shop, the advisors that are still in the shop that you left, they go after your clients. And I remember sitting down for coffee with these two guys who were still at the firm that I left and asked them how it was going. The one guy said to me, well, I just took, a $200,000 account from you. And I asked him the details. I said, well, are you qualified to look after what they're doing? Because they were option clients. They like the strategy called writing covered calls. They wanted to buy puts to insure their portfolio and so on. He said, no, I'm not able to do that, but I took the account from you. And I literally said, you these clients. And he said, well, yeah, I know I the clients, but I you harder. And that's what matters to me. It's a competitive business. This guy then went on to, lose these clients' money for the next 3 years because I won them back as clients eventually. They told me that when they asked him how long he'd been in the business, he said 17 because he was a middle-aged guy. This was his second career. And they assumed he meant 17 years. He meant 17 months. So at the beginning of the relationship with them, he lied about his qualifications. He lied about what he could do. The firm continued to make revenue off these people for the next 3 years. So the firm was happy. I don't think a complaint was ever filed. And that's one example of hundreds. If and when I ever opened up my own shop, I would eliminate this conflict of interest between advisor interests and client interests, reward people based on how much money it makes for you, the investing public, and not how much it makes for the firm. If you're interested in learning more about how to manage the relationship with your investment advisor, I'd recommend my book. You can go to Amazon.com and pick it up. It's for the low price of I think $2.99 or $3.99 or something. It's a quick read. I wrote it from Bangkok to Toronto, and it talks about how to tame your own instincts, how to tame the market, and how to tame your relationship with your advisor. I think there's some really helpful advice in there about how to do that. So sales pitch over. If you like the stuff that you see on this channel, please share the wealth. If you're interested in a new topic or something to talk about, I'm very open to doing videos on what people are interested in. So, send me an email or leave in the comments below what you want to talk about. As usual, thank you for watching. And once again, many thanks to people who've supported the Toronto Daily Bread Food Bank. And I'll see you next time.